Hey, good morning, everyone. Paul here with GammaEdge. Today is the 10th of March, Friday. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. So our summary for today, for Friday, is more of the same. We've got on our short-term timers, we use two of them. Both of them are short-term bearish. The longer-term timer is also bearish and has been so for some time now. So any rallies that we get are in the context of a longer-term downtrend. As expected from yesterday's action, market breadth as viewed by our 52-week new high, new low breadth indicator had the 52-week new lows outpacing the new highs. We've had several days of this. We are below transition on multiple time frames and slices. As many of you know, we track this. It's important. We do tend to mean revert, and when we're below by a significant amount, like we are right now, with the oversold condition, it is not out of the question that we could push north today and go towards that lower exposure zone. So ahead of the weekend, just be prepared to go long above 39.50 and figure out what you want to do as we get closer and closer to that 4,000 strike. The 0 DTE sensitivities, and we know we have a lot of folks who are playing this side of the table, are 3,900 to the downside and 3,950 to the upside. Pretty clear. In this range, we are bound. Below 3,900, the flows will support pushing downward. We think 38.75, 38.65, probably not lower. We could, but probably not with the current structure. If we do break above 39.50 from below, the flows will flip dramatically, and will push us upward. And we see a first resistance right around that first quarter point there at 39.75, and then again around 39.90 with a possible push into that 4,000, 4,005 area. We don't see going above 4,005 today as being very realistic. Anything can happen, though. It just depends on, we have a large number of puts that are being closed today. And when you close puts, that has a large impact on any form of intraday flows. So with that said, Charm Flows, the 3,900, not 39,000, sorry about that, are swamped by the opening and closing of these option positions. And so just remember that the influence of charm will ebb and flow around how active the market is. Very, very important. Cumulative tick model, really a composite you're looking at here. So the bolded white line is our CT model. That is the cumulative tick, and it's been closing on successive lows. When that occurs, the short-term trend is down, and we tend to continue to sell as the trend indicates, so just be aware of that. You've got quite a distance to go before this thing is going to reverse, so just be aware of anything there. We are looking for this type of transition to the upside before we would increase our long exposure. We call this the railroad track pattern. You can see that we've been down and it's been heading down. So we would look for the instantaneous CT, the white line, bolded white line, to cross above as we go north, and then we would look for short-term confirmation to increase our long exposure as this pushes north. Beware of false reversals. Something like this happened yesterday. You can also see where we can go horizontally for some time. So don't be too quick to pull the trigger on the longs. Let the trend come to you. Let the trade come to you, and just be open-minded about what could happen here. Taking a look at the key levels. Unable to annotate these charts due to being on my travel laptop, but across the board we have deltas that have gone down. That's pretty significant. I just want to call out that 3,800 is the new level for GEX on the low side. It's down from 3,900, but they're very, very close. You'll see that on the last slide. Upside 4,200 is unchanged. The combo complex is relatively, structured soundly. You will see some changes coming up as we look at the delta changes, though. The shorter term PM structure, just be aware that plus GEX has fallen from 4,100. Now it's at 4030. That's relatively important. Minus GEX is at 3,900. very strong level there. POI has actually come up a little as people add calls from 32 to 33. Charm flows, as I was saying, we've got this scenario where we've got just this large contributions coming in from the put side, virtually nothing coming in from the call side. You can interact with the charm graph here, and would urge everybody to do that. Above 39.50, you can see there is still going to be some negative flows coming in from these in the money puts, but for the by and large, we're going to flip a lot of this over to the out of the money status. And if we close those puts, we could push ourselves north pretty quickly. PM complex, red up and down the chain. You can see transition is way up here. That's important. We look at transition by looking where does the dominance of the put start ebbing and where does the call start flowing. So minus trans is sitting right around 39.85 here. Plus trans is sitting right around 4,000. That's your transition zone. Always look at that. That being said, extremely negative bearishness put dominated here. So just be aware that we are in a fairly deep oversold condition relative to where the transition is. Either the complex transition is going to fall to meet price, or price is going to come back. One of the two has to happen. It's just the way it works. The 0 DTE, more or less the same story. You can see where the short-term strikes are. The thing to look at when you're looking at the 0 DTE is that you can see the dominance of what is coming off today. This is a huge amount of puts that are in the money and out of the money. When in the money puts come off the table, we're slamming those deltas from, arguably a very negative delta number, -1 limit, and we're slamming those to 0, right? So when that occurs, the dealers will have to buy. So something's going to happen here today. It's going to be very interesting to see what does transpire. Into the weekend and Monday. So the 1 DTE is now looking at Monday. Still negative expiry up and down the chain. You can see that here. You can see where transition is. Always try to seek out where is transition relative to the current price, because when the rubber band is stretched this far south, it's usually an indication that we will have either some mean reversion where price goes back up, or transition is going to continue south as these call holders who are speculative give up the ghost and we start moving down the chain. Weekly crystal ball into next week. Just be aware of this node that's developing at 39.65. Little odd that this would be there. This is interesting in that this could be a short-term upside target. But again, look where the transitions are. 40.50 is the upside plus GEX level. 3900 is the downside lower level. Again, all the tiles for next week turned on. A lot of negative expiry for next week. So there is a potential that we could see some rally fuel independent of people opening puts here. Looking at the combo complex, I think it's pretty evident here. So this is that 38.65 zone. We think if we do lose the 3900, we're not going to push dramatically fast down into this area. This needs to be absorbed. These are in the money calls. These people need to feel that they're going to lose their ground here and close those calls. We don't think that's necessarily going to happen because it is the combo complex. So we would be looking at a 38.65 as a lower limit if we do lose 3900. So we would play to the downside down to this 39.75 area and possibly the 39.65. To the upside, you can see the 4,000 COI, call open interest, and put open interest spots here. You can also see where transition is. It's very, very clean. 4,000, 4,005 in the combo complex. That is the bogey. That is, effectively where the rubber band is stretched to, and we do expect some mean reversion back up to here. Just because this is so large, it's going to be very, very difficult to move this, and it's a Livermore number, etc., etc. Finally, again, not annotated. I apologize for that. I'll return to normal next week when I have my normal setup back in my office. 4,200 here is this line, 39 is this, 38 is this line. So you can see the 38 and 39 are back and forth. We obviously have got a lot of puts coming off the table today, so this structure will change. You can see the overall transition. Here's that 39.65 zone here that we were talking about, and then back up here into the 4,000. Structure's getting weaker, as you would expect, with a pull down and with all these puts being added. A lot of mass has now formed down here, and you can see because price has dropped, the gamma structure is less, but just be aware it's still descending per normal. 4,300 is still very much in play. We're not ruling out a rally here at all based on this, and the structure overall looks good, but the transition obviously is getting weaker, so we're going to have to see what happens. You know, do we start seeing some calls go in here to start negating this, pushing transition down, or are we going to see price come back up into this area, and then we'll see a rebuild of this particular area? So that's it for today. Follow us at GammaEdge's with an S on Twitter and here on YouTube. Please, two things. If you like today's commentary, smash that like button. Lets me know that we're providing the content that you want to see. And then, of course, follow us so that you get notified next time Taylor, myself, or Michael post a video. And if you're interested in kicking the tires here, of course, go to GammaEdge.us. Upper right-hand corner is a pricing link. Click on that, fill out the blanks, pick your plan, 14-day free trial, all the tools turned on. Great group of admins, moderators, and members who are all there to help you. So come on in, kick the tires, and enjoy seeing what we see, and we'll go from there. So make it a great Friday, make it a great weekend. Hope to see you in the Discord. Thanks, everyone.